You are watching Market Watch, the brief overview of the key events from the world of finance. After the release of strong U.S. employment data last week, market expectations for a reduction in interest rates have weakened. Rates are now projected to be cut by only 50 basis points by the end of the year. The yield on 10-year U.S. Treasury bonds remains at a high level, exceeding 4%, while the yield on 2-year bonds has reached a one-month high. Among the key events affecting markets on Tuesday are speeches by representatives of the European Central Bank and the Federal Reserve, as well as data on industrial production in Germany for August. Turning to the topic of yesterday's speeches by representatives of the U.S. Federal Reserve, we can note the statement by the president of the Federal Reserve Bank of St. Louis. Alberto Musalem supported the idea of further lowering interest rates, but at the same time stressed the importance of caution in conducting monetary policy. Musalem, who took up his position this year and does not have the right to vote on the Open Market Committee, spoke against the background of changed interest rate forecasts. The Fed initially planned a further rate cut of 0.5% by the end of the year. However, the strong growth in the number of jobs in September makes it necessary to reconsider how aggressively the authorities will act. Meanwhile, in Europe, Bundesbank President Joachim Nagel said he is ready to consider the possibility of a new interest rate cut by the European Central Bank at the upcoming meeting next week. In an interview with Table Media, he also noted that economic growth in Germany in the second half of the year will be lower than expected. The ECB has already cut interest rates twice this year from record levels, and markets expect further policy easing, with projected moves in October and December, as inflationary pressures ease faster than expected. In addition, the head of the Bundesbank supported the revision of the German government's forecast, according to which the economy will shrink by 0.2% this year, instead of the previously projected growth of 0.3%. On Tuesday, WTI crude oil prices fell by more than $2 after reaching a resistance zone, technically located in the range of $76 to $78.50. This does not indicate a reversal of the local trend, but a correction is possible. Also, the market expects the publication of inflation data in the United States, which will take place on Thursday, to assess the state of the economy of the world's largest oil consumer. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.